Alright, what's up guys? Happy Friday. Hope you had a good week. We'll do a recap here, take a look at a few things, but I hope you survived the short squeeze. My best guess is if you jumped into puts at yesterday's open, well, you probably didn't survive the short squeeze. If anything, you added to it. Been there, done that, that's for sure. So we'll talk about that a little bit. But a great bounce there. To me, it doesn't change the structure of anything. So my game plan next week is the same. Looking to short bounces, and we got the bounce now, so the question is, where do we look to short it? We'll take a look at that, but the first thing I want to show you here is the daily chart of the S&P 500 from 2008. Now, as a preface, guys, take this all with a grain of salt. If I start getting buy signals, I'm not going to look to short everything. I don't have a bias. I just focus on the structure. This is a structure indicator. But you look back in 2008, and you got sell signals. And you get your initial flush, you got sell signals, but then early November, you get the rally up to the 21 EMA, and then the S&P rolls over another 20%. If you look at the Qs from 2008, and in a second you'll see why I'm going back to 2008. Going into November, you get your big flush here in the Qs, you have your sell signals, but then you grind back to the 21 EMA in early November, and then you fade another 20%. And same thing with the small caps. Now, obviously, there's some context needed here. We all know what was going on back in 2008. But what's interesting is that with my buy signals here back in 2008, in early October, late October, early November rather, we had the green buy signals, so the official buy signal was printing on the VIX. And then as the VIX rallies again, down goes the market another 20%. So why is this interesting? Because today we're printing the first official buy signal. And I can't stress this enough. Take it with a grain of salt. This indicator is based 100% on things I focus on. But the key here is that you don't get a buy signal, you don't get a sell signal until both the weekly chart and the daily chart are completely aligned. So understand that context. When you get that green arrow, it means the weekly chart and the daily chart, based on my criteria, could not be in a better position to potentially trade higher. Everything is fully stacked. It doesn't get any better. So we haven't had this on the volatility index since 2008. Up until today's session. Take a look at today's candle. Here we go. It's the first one since 2008, so that's, how many years ago was that? Damn, I'm getting old. 14 years ago. Sheesh. Long time ago. Long time ago. So I'm not saying, hey, let's go short everything under, under the surface of the sun tomorrow, or Monday rather. Something to pay attention to. What this communicates is, hey, right now the weekly chart and the daily chart of the VIX could not be better positioned for a very explosive move. It could all fall apart next week. Just, I think, interesting, something to keep an eye on. But in terms of the indexes, so the key when you're short in the market, and it's the same key when you're getting long in an uptrend, you've got to pick your spots wisely. If you guys look at your positions today, right, so I'm sure a few of you are short right now. If you're going into today's close and your short positions are either close to break even or still profitable, after a short squeeze like this, that means you got a hell of an entry. It means you did a great job and you got a really good entry. So when the market gaps down yesterday morning, even though it feels like the best time to buy puts, it's the absolute worst time. Because then you're getting caught up in the short squeeze. You are the short squeeze, right? Your emotions and the other couple million people jumping in with you, you're causing the short squeeze. And I'm not talking to y'all specifically, you get where I'm coming from, right? When you're shorting the market and we have these 2 to 3 to X amount of day short squeezes, you want to be in a position where you're looking down on it. Meaning your entry is above that short squeeze. So a good example here is the IWM. Right? Now, this is our second time shorting it it's our second time shorting it this year. But we got an entry back here. We took nice profits on the flush to 200. We're taking those profits here. And then we're adding the short position up here. So that's where we got our current position. When IWM looks great, you're back above the 21, right? Everyone's starting to think, all right, maybe we are going to rally back to the upside. That's where you put the short on. Right? You're bouncing back to your weekly AEMA. We put the shorts on these bounces into weekly resistance. So, with an entry up here, don't get me wrong, like we're giving back some profits for sure. And while that's never enjoyable, that's a totally different position to be in. The market squeezes the shit out of the shorts this week, like what, 10% off the bottoms for the Qs, like something crazy. We're still slightly profitable. Right? Nothing huge, closer to break even, but still got a few bucks to our name on the trade. That good entry puts you in a totally different position at the end of the short squeeze versus taking those entries down here. You're getting squeezed. So keep that in mind, right? So, it's the same thing here with the QQQ. These are the spots where you're looking to put those shorts on. When everything seems the most bearish it could, right? Everybody's panicking. It's typically the worst time. So keep that in mind, right? You got to work good entries here. And if you look at all the shorts I've taken over the last 2 or so months here, that's the one common characteristic. Where we short an IWM over here, near the 21, catching the flush. Where did we short it recently? Up around 206, 208. Short in Nike at the 21. Not when it rolls over and pukes, we're shorting it into the moving average. Shorted Uber at the 21, short did Comcast at the 21 EMA, and shorted HCA, but that turned around and came against us. So it's not always going to work, but you got to get those good entries. So, with all that being said, that short squeeze up to this point has not changed the structure of these markets of ours. So the S&P 500, you are under the 21 EMA, you have sell signals. But more importantly here, right, because the daily charts are important, my game plan right now is centered all around the weekly chart. As long as we are trading under the weekly 21 EMAs, my thinking is we're starting a downtrend. And any bounce that takes us anywhere under the weekly 21, I would like to short it. There's no stacked EMAs. We spent the last 6 month and a half under the weekly 21, and you have the shift of momentum. You're playing a weekly squeeze, just like you would play a bullish weekly squeeze. So when you're above the 21 EMA, there's positively stacked EMAs, a positive histogram. You're trying to get your ass long here at the 21, and you're taking profits on the push. And any pullback to it, you're looking to add. Same song and dance here. So the S&Ps into next week, into the next few weeks, I think are shortable all the way up to the weekly 21. The QQQ, officially firing the weekly squeeze. We're 2 weeks in at this point. You spend 2 years above the 21. You spend 2 years with positively stacked EMAs. That's a buy the dip trend. But you've got to be comfortable when you get that pullback, because with that pullback's typically going to come your best entry to bring back the most profits. So the Qs are shortable up to the weekly 21, and of course the small caps here, same thing, guys. So the weekly charts, they're bearish. Weekly squeezes, I think, take us lower. In the shorter term, though, how high is high? Could the small caps grind back up towards that weekly AEMA around 208-ish? Certainly could. Certainly could. For the S&Ps here, got that 21 EMA, you got that 200 SMA. So I think early next week, that's kind of the level to focus on. But that's my focus, guys. And could this be the bottom before we rally back to the all-time highs? Maybe. I certainly don't think so. But you got to get back above the weekly moving averages to start to print those buy signals. And if we get buy signals, then I'll think about getting long. But that is what I got for you good people here. Hopefully, the advice as far as the entries makes sense. Let this bounce, and at some point you're looking to short that bounce. So when everybody's getting bullish and everything feels safe again, that's when you're looking to short. Not in the panic. So again, if you got some short positions, for any of you listening right now, and you held them through the 2-day short squeeze and you're still profitable or just about break even, you got yourself a great entry. So we got very small profits open on IWM. We do have a short here on Apple in the options room. That's kind of like break even right now. And we've also got a long position on DWAC. That's all I got for now, y'all. I will stick to the game plan next week. As long as I got sell signals, as long as we have bearish weekly squeezes, looking to short the bounces. And that buy signal on the VIX is certainly very interesting. So where do I change the opinion? When I start getting daily buy signals on my indexes, and when these indexes are trading back above the weekly 21 EMA. Then I'll change the game plan. Then I'll stop shorting bounces. Until then, that's what I'm looking to do. Real quick here, take you through the sectors. You still have sell signals here on the SMH, so structure does not change this week. Let's check out the industrial sector. No change in structure there. You got your sell signals, XLK, same thing. No shift of structure. Let's see, healthcare. Healthcare back above the 21. But what a bearish. There's nothing. It's tough to call it pretty. So it's one thing to get back above the 21 EMA and temporarily turn off the sell signal. It's another thing to have buy signals. You got that nowhere except energy. Let's check the financials here. They go into the weekend proudly wearing a sell signal. The utility sector, pretty good recovery here. I wouldn't get long there, but pretty good recovery. And last but not least is energy, which in terms of good-looking trend, though it's a bit extended, is your last man standing. But that is what I got, y'all, right? The ebbs and flows. It's all about controlling those emotions. And a huge part of controlling emotions is not getting attached to your open P&L. And continue to ask yourself, are the reasons that I got into this trade still valid? Okay. So for those of you in our mastery, the reasons that we got into the IWM short are still perfectly valid. More importantly, we're laying out that game plan for y'all before we take the trade. Our exit is up around 220, and our target is down around 175, 170. It's kind of sitting here in the dead middle in that daily squeeze. So you got to give these things the time to unfold. More importantly, if we're working good entries, got to get ready to potentially add. So all good stuff here, guys. All part of the ebbs and flows. If these indexes on a weekly basis start to close back above that 21 EMA, the weekly 21, then I think you got your shift, and then I think potentially the upside might be the path of least resistance. Until then, please don't short when we gap down 3%, and let's see how high is high next week. But that's what I got for y'all going into the weekend. Short IWM, Apple, and long DWAC. Hope you have a good weekend. I'll hit you with the Sunday video. We'll do some scans, dive in a little bit deeper here. But those are, I think, the important things I wanted to discuss today. Did any of this change bigger picture structure of those weekly charts or the daily charts? No. No, it did not. So therefore, it doesn't change your game plan. But at the end of the day, not always the most comfortable thing to sit through if you're short, even if you got a good entry. So make sure you're focusing on structure, structure, structure. And for me, in a lot of the trades we take, that's based on the weekly chart. So while we're trying to get that move from point A to point B, you got to sit through these daily ebbs and flows. Generally, this is what it's going to look like. Flusheroo, bounce, flusheroo, bounce. If we can keep making lower lows, then we're heading in the right path. All right, y'all. Have a good weekend. I'll talk to you on Sunday. Until then, be good, stay warm. Talk to you soon.